Welcome, curious minds. Today, we're embarking on a deep dive into Thermax Ltd,
Yeah.
specifically their financial results and, strategic moves for the first quarter of fiscal year 2025-26.
Yeah. Q1?
Our mission, well, it's to cut through the noise of all the official documents, board meeting outcomes, press releases, investor presentations, even the AGM proceedings.
There's a lot there.
Exactly. And extract the most important nuggets of knowledge for you.
And Thermax is definitely a company worth watching. I mean, they're a leading player in energy transition environment solutions.
Right.
So their performance isn't just about their own numbers. It kind of tells us about broader trends in sustainability, green energy.
It's a real indicator, and we've waded through, well, a significant amount of detail here to bring you the core insights, save you some time. So let's get right to it. Let's unpack what this latest quarter really tells us. Let's start with the headline numbers for Q1 FY26. So that's ended June 30, 2025. What immediately jumps out from the consolidated results, I think, is this powerful surge in profitability.
Definitely.
Profit after tax, PAT, it soared a remarkable 39% compared to the same time last year, hit Rs 151 crore.
That's a big jump.
Yeah, and profit before tax, PBT, also saw a healthy 31% increase. But here's where it gets interesting.
Yeah.
Despite these pretty impressive profit gains, the consolidated operating revenue actually saw a slight dip, about 2%. It landed at Rs 2,150 crore, down from Rs 2,184 crore. And the company sort of pointed to delayed customer clearances, execution challenges, things like that.
Yeah, that consolidated picture looks, well, robust on the profit side, no doubt about it. However, if we peel back a layer, look at the standalone performance, it tells a distinctly different story.
Oh.
Standalone operating revenue dropped more significantly, by 10%, down to Rs 1,183 crore.
Ooh, okay.
And consequently, standalone P8 decreased substantially, 47% down, landed at just Rs 46 crore.
Wow, okay. That's a pretty stark contrast, isn't it?
It really is.
Consolidated profits way up, standalone profits sharply down, and revenue dips in both places, though different amounts. What's driving that divergence? That seems like the immediate question.
It is. And what's fascinating here is that the consolidated operating income for this quarter, Q1 FY26, it includes a pretty significant accrual, Rs 56 crore.
Right.
And this comes from the Package Scheme of Incentives, or PSI, from the government of Maharashtra.
Ah, okay. Government scheme money.
Exactly. It's designed to promote industrial investment. And this one-off accrual gave a really strong boost to the consolidated profitability this quarter.
I see.
If you compare it, the prior year period only included about Rs 27 crore, and that was from interest on an income tax refund. So much smaller.
Right.
So essentially, this PSI income, it acted as a powerful tailwind. It kind of masked a softer underlying operational performance in the standalone business. It really highlights how these external incentives can play a huge role in the overall reported results.
That certainly helps connect the dots on the profit surge.
Yeah.
Okay. So while that external support is, well, always welcome for a company,
Sure.
it means we need to look closer at the core operational growth, which brings us to those forward-looking indicators, the order books.
Yes.
What are those telling us about Thermax's momentum, especially after those revenue dips?
Well, the order book data, it definitely paints a more optimistic picture for future growth. Consolidated order booking for the quarter was up a solid 7%.
Okay, good.
Came in at Rs 2,748 crore. And crucially, the consolidated order balance, the work they actually have lined up, also increased by 7%. It's over Rs 11,300 crore now.
That's a healthy backlog.
It is. And on the standalone side, order booking saw an even stronger increase, 20%, which indicates healthy future activity for their core Indian operations too.
Okay, that's definitely a positive sign for what's ahead. Can you maybe elaborate a bit? What's driving this order book increase? Which sectors are looking strong or maybe showing some challenges?
Sure. The increase was primarily fueled by some large orders within the industrial infra segment. That's great to see.
Right.
And also by improved bookings in green solutions, which lines up with their strategic focus.
Makes sense.
However, it's probably worth noting they did miss some of their order booking targets in the products and chemicals segments this quarter. So some areas may be a bit softer on demand.
Okay.
As for the sectoral distribution, well, the top contributors to their order book are power at 14%, metals and mining 13%, sugar distillery 12%, refinery and petrochem 10%, and cement 9%.
Pretty diversified.
Yeah. And inquiry inflows, they remain strong from power, sugar distillery, and metals. That's encouraging. And there's been a huge upsurge in inquiries from refinery petrochemical.
Interesting.
Yeah, but it's also interesting that despite strong inquiries, actual order bookings to the power sector specifically dropped this quarter.
Okay, so lots of interest, but maybe not converting just yet in power. Right, let's unpack this further then. Let's dive into the performance of each core business segment. Where was the real action and maybe the real challenge this quarter?
Okay, let's start with industrial infra. Because this segment, wow, it really turned a corner.
Yeah.
Its profit before interest and tax, PBIT, it swung dramatically. From a loss of about Rs 18 crore last year
Right.
to a healthy profit of Rs 71 crore this quarter.
Whoa.
Now, this huge turnaround, as we just discussed, was largely due to that PSI income.
The incentive money again.
Exactly. Now, its revenue was slightly down, but the order booking increased by 17%. And that included a significant Rs 200 crore order for an emission reduction project for a big conglomerate in Kuwait.
Okay, so a massive profit swing driven by the incentive, but also strong new orders coming in.
Precisely. It's a big shift for that segment.
Okay, so how did the industrial products segment fare then?
Industrial products, well, it saw both revenue and PBIT slightly lower compared to the previous year, mainly just due to that decreased revenue.
Right.
But despite this, order booking for this segment was actually up 2%.
Yeah.
And its order balance increased by a healthy 20%.
Okay, so maybe a softer quarter on delivery, but the future pipeline looks stronger there.
Seems that way, yeah. Signals future revenue recognition.
And what about their key growth area, Green Solutions? Did that segment live up to its name?
Green Solutions showed some really promising progress, actually. Despite a marginal revenue decrease, its profit before tax improved quite a bit. Rs 8.88 crore, up from about Rs 5.7 crore.
Good. Why was that?
Driven by enhanced operational efficiency and new projects coming online, which is exactly what you want to see from a growth segment, right?
Definitely.
And crucially, order booking for Green Solutions saw a strong 28% increase.
Okay, that's a positive sign of strategic alignment paying off. Finally, the chemicals segment. What happened there?
Yeah, chemicals. It experienced a decline in profitability. PBIT was nearly halved. This was attributed to, well, marginal revenue growth, higher input costs, and a change in the product mix.
Okay.
So it suggests the segment might be facing some specific market pressures, maybe commodity volatility. It's acting as a bit of a short-term drag, contrasting with the stronger order books elsewhere.
Right. And the orders?
Order booking was down 20%, and the order balance decreased by 15%. So, yeah, definitely a tougher quarter for chemical.
Thanks for that detailed breakdown. That really clarifies things. Okay, so beyond the numbers, what strategic developments and operational achievements really stood out for Thermax this quarter, especially thinking about their focus on green solutions?
Yeah, this is where it gets really interesting for their long-term direction, I think. On the innovation and green initiatives front.
Yeah.
Well, they recently inaugurated a solid oxide electrolyzer cell SOEC pilot facility in Pune.
Okay, what's that about?
It's a significant step in their green hydrogen journey. The aim is to achieve the lowest levelized cost of hydrogen, LCOH, which is, a major goal for the whole industry.
Right, making green hydrogen competitive.
Exactly. And they also received NSF Standard 61 approval for their PFAS removal resin.
PFAS, the forever chemicals.
That's them. And NSF 61 is a critical standard for drinking water system components. So this approval is a big deal. It opens doors to highly regulated markets like North America, Europe.
Wow, okay. That's potentially huge.
Yeah.
Yeah.
And they're also pushing other innovative products like Thermatron, which is an electric boiler, and biomass-fired systems like Green Pank and Green Block. These convert agricultural waste into clean energy.
So a real push towards diverse green tech.
Definitely shows that. Then, in terms of operational excellence, their industrial infra segment achieved something pretty impressive. 1.7 million safe man-hours with 0 first aid cases or accidents in Q1.
0. That's outstanding.
Yeah, a 100% decline from the previous quarter. It's a fantastic safety record in a demanding sector. And their Green Solutions subsidiary, Toessel, was named Best Safety Compliance Contractor for 2024-25.
Okay, so focusing on safety too. Good to see. What about project wins and global reach?
Yeah, several notable achievements there, too. For global footprint and project wins, they delivered the first electric hot water generator in Mundra, in Gujarat, commissioned a big water source electrical heat pump for an auto company in Pune. Internationally, they supplied an emissions control bag filter for a Thai cement producer. And they commissioned a new chemical manufacturing facility in Cilegon, Indonesia, That really strengthens their presence in Southeast Asia.
Expanding
Yep.
geographically.
Right. And for industrial infra, they commissioned a large waste heat recovery boiler in central India and synchronized a 25 milliW combined heat and power plant for a refinery up in Assam. So concrete examples of their expanding reach and project execution.
Lots going on. And digital. Are they keeping up there?
Seems so. On digital transformation, they're leveraging an AI and ML-powered industrial IoT platform. They have a digital customer portal, a 247 global cyber defense center. They meant 67 digital projects are currently live.
Okay.
So yeah, it shows a commitment to using tech for efficiency and customer engagement.
Those are some impressive operational and strategic moves, clearly aligning with their green and global ambitions. How do broader market and industry trends play into Thermax's performance and outlook? Are they riding a tailwind, or is the environment more challenging right now?
That's an important question, yeah. Connecting it to the macro picture, the Manufacturing Purchasing Managers Index, the PMI, for India averaged a strong 58.1 in Q1 FY26.
That's pretty good.
Yeah, it's up from the previous quarter. And June actually closed at a 14-month high. So that indicates a generally robust manufacturing environment in India, which is certainly a tailwind for a company like Thermax.
Okay. What about costs? We heard chemicals had higher input costs.
Right. Well, regarding input costs overall, while copper and aluminum did see a modest 5–7% increase compared to Q4, other key commodities like steel, nickel, zinc, they remain stable. So the company said there was no significant overall impact on input costs this quarter. Chemicals might be feeling specific pressures, though.
Got it. And the bigger picture on green energy.
Well, what's truly crucial for Thermax's future, I think, is India's net zero vision.
Right. The government push.
Exactly. It's driven by aggressive government policies, the National Hydrogen Mission, the FAME scheme for electric vehicles, new carbon regulations. Thermax is actively aligning its strategies with these national initiatives.
Positioning themselves.
Absolutely. Positioning itself at the forefront of the green energy transition. It's essentially shaping its future in these critical sectors.
Okay. Beyond the quarterly numbers and operations, let's briefly touch on the corporate governance side and how Thermax engages with its stakeholders, starting with their recent AGM.
Sure. Their 44th annual general meeting was held virtually, end of July, July 31st, 2025, chaired by Mrs. Mayor Pudamji.
And the key takeaways.
Well, the key resolutions passed included adopting the financial statements, declaring a Rs14 dividend per share for the last fiscal year.
Okay, dividend confirmed.
Yeah. And importantly, the reappointment of Mr. Ashish Bhandari as managing director and CEO for another 5-year term.
So continuity and leadership.
Right. They also continue to pick up significant external recognition. Awards like the Sustainable Organization Award 2025, the EY Entrepreneur of the Year in Manufacturing. It helps validate their direction.
And stakeholders.
Yeah, you seem quite committed there, too. For employees, there are wellness programs, leadership development. For vendor partners, sustainability training. And they mentioned over 54% of material is sourced from sustainable vendors now.
That's interesting.
Yeah. And for the community, their Sathai initiative supports social security schemes, and the Thermax Foundation runs educational projects.
Okay, sounds like a company trying to engage across its ecosystem. But what about the less glamorous side, the behind-the-scenes challenges, like any long-standing legal matters? How are they navigating those?
Right, there are a few significant legal things to be aware of. First, there's a substantial ongoing excise duty demand. It's 1,385 crore.
Wow, that's huge.
It is, and it actually dates back all the way to 2017.
Goodness.
Yeah. Now, Thermax initially won an appeal, but the commissioner has appealed that to the Supreme Court, which admitted the appeal last year, July 2024. Despite this, the company says it remains confident of a favorable outcome based on independent legal advice.
Still, that's a massive number, and a decades-old issue still hanging over them really shows the long tail on some of these legal battles.
It really does. Second, there's an arbitration dispute involving about Rs 218 crore. This relates to field gas turbogenerators.
Okay.
The company has appealed this to the Bombay High Court. They received a stay, they've deposited the amount, and again, they remain confident of a favorable decision.
So another one they feel positive about, but still requires managing. Anything else?
Just a smaller one. An insurance claim for about Rs 29 crore for solar plants that got flooded in Tamil Nadu late last year and early this year. That's been agreed upon, and it's not expected to materially impact these Q1 results.
Okay, that one seems settled. Any structural changes in the group? Subsidiaries, holdings?
A few minor things. First, Energy 8 Private Limited ceased to be a wholly owned step-down subsidiary. They incorporated a new one, Fortmax Chemicals India Private Limited, and Thermax increased its shareholding in Thermax Bioenergy Solutions Private Limited to nearly 77%,
Right.
strengthening their position in that growth area.
Actually, bioenergy.
Yeah. And they also sold their investment in a company called Covaxis Technologies Private Limited, recognizing a small gain there.
Okay, so some tidying up and strategic adjustments. Right. So to kind of recap this deep dive then, Thermax Limited, well, they've navigated a fascinating quarter. Shows both strength and nuance.
Definitely.
We saw strong consolidated profitability, yes, but largely driven by those external incentives.
Right, the PSI income.
And a growing order book across key segments, which is positive, but that's despite some standalone challenges and that slight dip in overall operating revenue.
A mixed bag in some ways.
Yeah. The company's clearly doubling down on sustainability, innovation, strategic growth, securing significant new projects, expanding globally, all while, managing a few notable, long-standing legal hurdles in the background.
And if we connect these insights back to the broader market, well, Thermax's performance, particularly that significant investment in green solutions and their ability to secure large orders in segments like industrial infra, it clearly reflects the increasing global push towards energy transition and environmental solutions.
Absolutely.
Their strategic alignment with national policies like India's net zero vision, it really showcases a company that's not just reacting to market dynamics, but actively trying to shape its future in these critical sectors.
Well put, absolutely. So maybe a final thought for you, our listener, to consider. What could it mean for the broader industrial sector as companies like Thermax continue to innovate, address these huge global sustainability needs, all while navigating market fluctuations and these complex, sometimes decades-old legal landscapes? Something to ponder.